Hi, good week to all. Welcome to this week weekly technical outlook on the major stock indices for the week of 10th of May to 14th of May 2021. So before we covered the key levels to watch as well as the directional bias on these various major indices, the SPX 500, the Nasdaq 100, the Hong Kong 50, the Japan 225, as well as the German 30 index, let's take a look at the disclaimer slides first. All right. So before we start, let's take a look at last week weekly performance across the globe as depicted by these major indices against its prior week and its prior 4 week average. So what we could see on we start off with the US region first on the SPX, the Nasdaq 100, the Dow Jones, the Russell. So we could see very clearly there's an outperformance of the Dow Jones Industrial Average. So as those who followed me frequently on my Twitter as well as my prior weekly outlook presentation, we did highlight that we are still expecting this ongoing outperformance in Q2 on cyclicals and value related stocks over growth and technology stocks, where we have a significant high percentage of cyclical and value stocks on the Dow Jones Industrial Average. So that could explain last week strong outperformance on this Dow Jones Industrial Average, followed by the S&P 500 1.23%, 2.67, and this is where the heavily concentrated tech index, the Nasdaq 100, underperformed with negative 1.02%. The Russell almost unchanged at 0.23%. So what we could see is that the major US indices, with the exception of the Nasdaq 100 as well as the Russell 2000, the S&P managed to actually surpass last week weekly return, managed to surpass its prior week and the prior 4 week average, and followed by the Nasdaq, the Dow Jones Industrial Average as well. Strong outperformance last week above its prior week at negative 0.5%, followed by its previous prior 4 week average at 0.54%. There we see underperformance in the Nasdaq 100 and also pretty much unchanged on the Russell 2000. And what's pretty much that is still in the doldrums will be the China related stock market, which is the Hang Seng Index and the Hang Seng Tech Index. Both of them are actually kind of in the red. What's good over here is the Hang Seng actually performed better. Last week performance negative 0.4%, much better than its prior week performance at negative 1.22, but still below its previous 4 week average of negative 0.18%. Then the tech sector was badly hit, negative 4.31%. All these are one of the reason why is because due to this ongoing negative news flow that is still surrounding in the market, because we are watching very closely about any news regulate regulation that's being imposed by the Chinese authorities on the China big tech e-commerce practices. So kind of a negative news flow that is impacting the Hang Seng Tech Index, which is eventually we start to see this significant underperformance so far on the China big tech stocks. Then what we could highlight is the Nikkei 225. Still recall Nikkei 225 last week. We highlight that the Japan stock market is about to stage a bullish breakout from close to about 3 to 4 weeks of triangle range consolidation, and which indeed it actually momentum wise is actually indicating this potential bullish breakout that is about to take shape. We could see the weekly performance surpass last week performance 1.89%, surpass its prior week performance negative 0.72, and as well its prior 4 week average at negative 0.52%. Also strong performance on the German DAX, which is also heavily weighted on cyclical and value stocks. Last week up by 1.74%, above its prior week performance and as well its prior 4 week average at 0.05%. All right, now very quickly, let's take a quick breakdown or dissect on the 11 sectors of the SPX 5 sectors performances. So what we could see, it means that in the SPX 500 there are actually 11 sectors that's been breakdown. So very clearly strong outperformance or the cyclical and value related sectors: energy plus 8%, materials plus 5.8%, financials 4.2, industrial 3.3%. And if we break it down on a running 3-month basis till last Friday, very clearly, double digit performance, 26% on the energy, the financials 22%, materials 19%, industrial 18%, and we start to see information technology with a very minute return, only plus 2.4%. And if you look at year to date, from the start of the year till last Friday, 7 May, astonishing return on the energy 41%, 27% on the financials, materials 21%, industrial 18%, and we come for the information technology at 6%. So what we could see is that momentum, positive momentum fits positive momentums. So this is what the kind of team play that we are actually expect to see in this current ongoing Q2 quarter for 2021, where we are still expecting a strong outperformance on this cyclical and value play or value stocks in the US stock market, and as well as it start to spread across the globe. All right. So now some notable company earnings announcement for this coming week on 10 for the week of 10th of May to 14th of May. We have this Roblox, which is a kind of a social network of e-gaming. So some of us were saying that the metaverse will be a kind of a new growth area to keep a lookout on for the next 5 to 10 years. So for those who are actually interested in how does the earnings of Roblox being a kind of a benchmark of this metaverse universe, do keep a lookout on their Q1 earnings releases on today. In fact, after the market close. Okay, there you have this Tilray is one of the major pot stocks or cannabis stock that is also up out today after the US market close. Then thereafter, you have this Alibaba, which is pretty much closer to Asia. Is on this is the US timing, Thursday before the market open, or in fact Asia before the market open. That means before 9:30 p.m. US time. Then followed by another major EV. This is a ADR as well. Xpeng, Thursday before the market open. Then last but not least, Coinbase. As we all know that cryptocurrency has been a kind of a phenomenal volatility or phenomenal movement since the start of this year, where we start to see Ethereum surpassing Bitcoin leadership in the last 4 weeks, and we have this meme stock, a meme based, pardon me, alternate coin like Dogecoin. Has a year-to-date return of 11 over 1,000%. So do keep a close eye watch on how this current movement on this cryptocurrency space translate to revenue for Coinbase exchange, all right, which is one of the major exchange, crypto exchange worldwide. So it will release its Q1 earnings on Thursday after the market close, which is after the US market close. Then lastly, followed by Walt Disney, after also on Thursday after the close of the US session. All right, now let's take a look at the technical chart on the various major indices that I would like to highlight. So first and foremost, I would like always start with the one, the growth proxy, which is the semiconductor industry or the or basket of semiconductor stocks. We call it the iShares PHLX Semiconductor ETF, SOX in short for the ticker short. So it actually comprises a basket of key US semiconductor stocks. So what we could see over here is a very strong rebound after the initial test on the lower boundary of this major ascending channel that is in place since 18th of March 2020 low, and as well as the 100-day moving average that has been providing good support since 5th of May, and as well as 23rd of May, September, and 26th of October. Pardon me, earlier on is 23rd of March. All right, so that was the previous pullback, and on the 8th of March as well. So as you could see, previous pullback managed to actually find strong support at this lower boundary of this ascending channel support, as well as the 100-day moving average, which actually occur on Tuesday as well. So if you could look at the candlestick formation over here, it start to form a very bullish hammer after this gap down on Tuesday, and also with the RSI turning up from a corresponding support at the 43 level and 37 level mark. So all in all, what we could see over here is that this confluence of support area actually indeed provided some kind of bullish tone revival back into the semiconductor stocks. So all in all, I'm still watching the key support to hold at 30, okay, 392.50, 392.50. Still looking for a kind of a further potential upside, or we call it this impulsive up move remains intact. All right, heading towards the next resistance to 458. A break above it should actually take us up to the top of the channel at 495, which is so being defined by the 1.236 Fibo expansion level. Okay, now going on to the SPX 500, let's start with the higher time frame horizon charts first on the daily chart. So still no change on the daily chart. We could recall that we're still expecting the SPX to actually shape higher high, i.e. making new high, because the technical configuration still suggests that number one, the medium term uptrend, from the low of October last year still pretty much remains intact. And what we could see over here is that it's still holding very strongly above the 50-day moving average. No clear signs of a we call exhaustion that is being seen on this daily RSI indicator. Last week, a pullback managed to actually stage a rebound off from this previous resistance. Now turns into a pullback support right at the 58 level mark. So all in all, right, we do not see any sign of a potential medium-term exhaustion that could actually start to see a kind of a consolidation, or even a medium or a bearish reversal of this medium-term uptrend that is still intact since October 2020 low. So with that, right, let's go to the strategy chart, which is the 4-hour chart. So what we could see is that last week we are actually expecting a break of this 4220, the first resistance. So indeed, it actually went surpass it in today's on Friday is at 4236, and in this today's Asia session is going to inch higher, printing a high of 4244. So with that, what I'm going to do is I will actually tighten the key medium term pivotal support to 4180. So what's 4180 is actually this congestion zone over here, the congestion zone from 16th of April to 5th of May, and as well as the lower boundary of this short-term ascending channel support that is in place since 5th of March. So I'm actually potentially using any potential pullback to maintain this bullish bias, holding above this key tighten medium-term pivotal support at 4180, looking for a further potential kind of push up to actually target the next resistance at 4280 slash 400 400 figure level. A break above 4300 figure level should take us up toward 4330 next. All right, so key support to watch for this week will be at 4180. All right, now going on to the Nasdaq 100. So if you look at the Nasdaq 100, last week it did a bit of scare. Still recall that we have this 14,040 level as our key upside trigger level to actually validate or to actually reinforce our further impulsive up move. So what we could see, yes, it didn't break above 4030 and shape that pullback, and where this pullback actually stopped, it actually stopped close to the 50-day moving average, and as well as the former this former swing high area of 16th of May to 16th of March to 18th of March. So this is what we call it we call it the inverse head and shoulder neckline resistance, now turns into a pullback support. Later I'll share. Okay, now go to the 4-hour chart. You'll see much clearer on the 4-hour chart. So this is the inverse head and shoulder bullish breakout, and what we could see, the price actually tested very close to this pullback level, which is at now turns into a support at 32,255, and also bounces off from this kind of a ascending trend line support that is in place since 6th of March 2021 low. So what we could see over here is that I will actually use 13,255 as my key support to watch for this week, to actually maintain this bullish bias, but I'm still looking for at least a daily close above 4040, which is the key upside trigger level, to reinforce a further potential up move to target the next resistance at 14,435 slash 14,460 on the Nasdaq 100. All right, now moving on to the Hong Kong 50. So you could see that the Hong Kong 50 is still continue to actually churn sideways below this upside trigger level that we have for the last 2 weeks, 29,270. So a quick recap, what is 29,270 is in fact the neckline, resistance of this potential inverse bullish head and shoulder configuration that is still forming in place since 9th of March 2021. So it has been churning pretty much sideways for close to about 8 weeks plus. Number one, it has been kind of a being a sandwich between global positive sentiment on the majority of the stock global stock markets or stock indices, but however on the localized front it tends to be negated by this ongoing regulatory negative news flow on those China big tech company like Alibaba, Tencent, and Pai2 as well as JD.com. So that gives rise why the Hong Kong 50 tend to be a bit more, it tend to be a sandwich between the key medium term pivotal support that we have last week at 28,000 level and the upside trigger level at 29,270. So what we could see over here is that yes, today it actually did another sell down again, but what's surprising it over here is that it managed to find a bit of support at the intermediate it managed to actually see a bit of bullish tone coming back into the market with this 4 hour hammer candlestick followed by another turn up follow through right above this 28,400 intermediate support. So not too scary yet. So as long as this 28,000 key medium term pivotal support holds, I would not want to validate any further corrective down move on the Hong Kong 50 index, and I am watching to see a daily close above this upside trigger level, which is the neckline resistance of this impending inverse bullish head and shoulder reversal, a bullish reversal configuration, a daily close above this neckline resistance at 29,270 to actually reinforce a further potential recovery towards 30,140. Then thereafter, by this followed by this 18th of February 21 range form, pardon me, swing high of 18,000 of 18 Feb 21, which is the current 52-week high at 30,760 slash 31,080 level. All right, so now moving on to the next Asia index that I share with you all will be the Japan 225. So like I said, why Japan 225 is pretty interesting because as I mentioned, based on the Elliott wave and the fractal approach, we are now approaching, or in fact have already may finish the last leg of this 5 wave of symmetrical triangle configuration that has been in place since the high of February this year, which is at 30,716. So this 13,716 is also close to about a 31 plus year high that's stretching back to the early 1990s before during the after the local Japanese crash, stock market crash triggered by a property bubble. So it has been kind of a close to for about 3 months plus of sideways movement, I would say. So in fact last week it comes to the tail end of this symmetrical triangle configuration as depicted by the Elliott wave and the fractal analysis approach. And where does it stop? It also stop right above the ascending channel support of this major ascending channel in place of 16th of March. And what's interesting over here is that if you look at the momentum indicator, the daily RSI, if I could draw a corresponding resistance on the RSI that is very much the same as the graphical resistance that was being drawn on this symmetrical triangle range. Okay, if you look at the daily RSI resistance, the corresponding resistance, price on the daily RSI has already staged a bullish breakout ahead of the price action resistance, which is this symmetrical triangle resistance. So as you all know that daily RSI is actually a momentum indicator. So a momentum indicator tends to measure rate of change. So before any object, let's take it like a car. Before a car starts to move further away from a particular distance or move further, it got to pick up speed first. So similar for this potential bullish breakout of this symmetrical range configuration of the Japan 225, in order to see a bullish breakout, I got to see momentum building up first. So what it depicts over here on the daily RSI is upside momentum has indeed starts to build up, which increases the probability of a potential bullish breakout of this close to 3 months plus of range configuration that has been in shape since 16th of Feb 2021. So now moving to the strategy chart, which is the 4-hour chart. So we could see that last week we have this key medium-term pivotal support at 28,300, which is the lower boundary of this symmetrical triangle range. So still no change. I'm using 30,230 as an upside trigger level, okay, which is confluenced by the swing high of 25th of Feb, rejected again on 18th of March, rejected again on the 6th of April. So this is pretty significant level. So I'm looking for a kind of a daily close above 13,330 to actually kind of reinforce the start of another potential impulsive up move, multi-week up move, to target the next resistance at 31,350 in first step for the Japan 225. All right, now moving on to the last index that I will be sharing with you all with the German 30 index. So one of the index that tends to be my favorite list right now is due to its number one. Why? Because it has a heavily weighted composite stock that is tends to be cyclical and value in nature, which is actually benefiting from this ongoing reflationary and commodities upside that is actually reinforcing the outperformance of cyclical and value stocks over growth and technology stocks. So what we could see is that very interesting. Last week, initial sell off or pullback on last Tuesday managed to find support at the 14,800 level. What's 14,800 level? Is in fact the former swing high area of 18th of March, turns into a pullback support, as well as this 50-day moving average that has been supporting this ongoing medium-term uptrend that is in place since the start of this year. And what's so interesting, after it shaped a pullback and a strong V-shaped rebound to actually retest its previous all-time high area of 19th of April. All right, so this is the current all-time high area over here, which is at 15,501. All right, so in fact, right now today is trying to actually test very close to this level. So based on the current price action right now, is quoting at the high, a current intraday high of 15,471. RSI pretty much positive, bouncing off from a corresponding support at the 41 level mark, and also now back above the 50 level mark, so indicating to us that medium term outside momentum remains intact. Now, going on to the 4-hour strategy chart, so we could see very clearly that 14,800 will be my key medium-term pivotal support to watch. So if we were to scroll down in the lower time frame, it's also the lower boundary of shorter term ascending channel that is in place since 1st of Feb 2021 low. So what we could see right now here is right now is trying to actually do a bit of kind of a consolidation or pullback right at the median line of this short term ascending channel that is kind of acting a bit of resistance, which is also right below the 15,530 slash 15,580 intermediate resistance that we kind of predefined last week. So what we could see is as long as any pullback is managed to actually hold above the 14,800 key medium-term pivotal support, we are still more in favor of a bullish bias to see further potential up move to actually target the next resistance at 16,070, which is defined by a confluence of Fibo expansion levels and the upper boundary of this short-term ascending channel that is in place since 1st of Feb, which is also confluencing at the 16,070 level. All right, so with that, in a nutshell, we are still expecting the current medium-term bullish trend for the indices that are highlighted in this short video remains intact, and we're still expecting to see further potential all-time high on the German 30 index, followed by the S&P 500. The Nasdaq 100, in order to see further potential all-time high or further potential impulsive up move, it got to have a daily close above that 14,040 level. Okay, so with that, have a great trading week ahead, and I see you all next in my next video.